Well, good afternoon. Good afternoon and welcome to another of our Webinar Wednesdays hosted by Cal State Bakersfield Small Business Development Center. Good afternoon, I'm Kelly Bearden. I'm your host for today. And we've got some really great speakers and topics today to go into. Great lending programs, disaster units, disaster changes. So let's get rolling. Got a lot to go over in a short period of time. And what's coming up is number 289 next week. And it's going to be on home care child opportunities. As childcare remains a huge problem, getting more childcare providers and actually finding a system to where a childcare business can work out of your home. Crystal Quinones of Nurture will be joining us, talk about some exciting new training and grant programs to assist those wanting to start childcare businesses out of their home. September 6th. Since, our producer, Maureen Busherdang, has worked so many of these holidays and not this year. So no webinar during Labor Day week. We'll be back on the September 13th, talking with Sarah Sims from the San Francisco Federal Reserve Bank. That's what's coming up on Webinar Wednesday. But what's happening today? Today, August the 23rd, 2023. Well, there's new news and exciting news from the disaster front. Yes, that, rain, wind, snow, and all other type of weather that we got back in, the winter part of the season, but not this last weekend. The winter part of the season is what we're going to be talking about. The declaration from both earlier in January and also in March, and we'll be getting into that and talk about some of the exciting programs to grow and to start your business from Access Plus Capital. Yes, that's my own rendition of Access Plus Capital, the A+C, which I think is a phenomenal trademark. And hopefully the A+C people were on last week when we talked about trademarks from the U.S. Office of Patent and Trademarks. So look at that. It's beautiful. Hey, our Capital Quarter is going to make a quick cameo return with our seventh installment in the actual how to keep from, running into, a debt problem with your business. Community calendar is blowing into event season. We'll talk about a number of the options coming up and things that are going on in the community. Our city grant program, the city of Bakersfield, is still taking applications. As always, your questions, please go to the Q&A box for questions for today. And also, you're going to find a lot of resources put in by Maureen into the chat box and by others. And our poll. So let's go to our poll today. So as you know, we generally, for those that are around a little bit, like to have a little bit of a poll on, and to set up this poll on Webinar Wednesday is I had to go to my pet peeve file. And, one of the things that I get tired of hearing is wrong and inappropriate stats being attributed to the number of businesses that either go out of businesses or survive. Now, for me, it's about survival. So my glass is half full. So this is going to be our first poll question. It comes from the Bureau of Labor Statistics, and it's basically how many businesses that start up are around that next year for their first year anniversary. Is it going to be 20%? And this isn't the failure rate. This is the actual businesses out of 100% that survive. So is it going to be 20% survive, 50% survive, or 80% survive? I get tired of all these statistics thrown out that I know are inaccurate about the number of businesses that either survive or fail, however you want to put it. I like to use survive. So how many of the businesses that start up 1 year later are still around? Is it 80%, 50%, or 20%? So again, how many survive? We have 76% of you participating. What am I waiting for? Let's end this poll and share the results. And 50% of you say 50%. And 50% of you are incorrect. 31% say 20% of businesses survive. Now, I think maybe a couple of you might have been thinking, the 80-20 rule, and it's 20% that failed. That is correct. 20% do fail. So it is 80%, 19% of you, 80% are around the next year and survive that actual first year. So when people tell you 50%, don't believe them. Businesses are far more resilient than that. Small businesses, 80% survive the first year. So let's see, you flunked that question. So let's move on to question number 2. So question number 2 is going to be essentially kind of how many businesses are going to survive after 20 years. So we did 1 year. So after 20 years, according to the BLS, how many businesses survived? Is it 10%? Is it 20%? Or is it 40%? So our businesses, we lost 20% of them that first year, 80% survived. Year 1, how many survived year 2? Is it 10%, 20%, or 40%? And we do have 59% of you for participating. Thank you for jumping in and working with us on this poll question today about my pet peeve about how many small businesses actually survive. And we got 72%. That's an outstanding number. Thank you for participating. Last chance to get in as we end the poll. And as we end the poll, we are going to end it right now. So sharing the results with you. We have a tie for first between 20 and 40% of you. 20 and 40% of those businesses surviving. The number is actually 20%. It's that old 80-20 rule again, isn't it? So 20% survived, 38% be correct. I do like the optimistic 40% with another 38% of you, and 25% say only 10%. So thank you for participating in today's poll, and let's move on and actually show you a little bit of that table that only runs out to 15, but you'll see here that starting like when they first did these in 1994, you have 100%, and then you have 79% survive. And as you go down to 50%, or year 6, it's when you actually get to 50%, all the way down to year 20, that still has around 20%. So there you go. So we're back with Capital Quarter. Just been missing you on Capital Quarter. We've been real busy and going to just make a quick cameo here. We've listed over since the debt ceiling crisis gripped the country and government around, the United States. And then we realized there's a debt ceiling for small business. It's factors that can limit you to raise capital. And these are all ones that we discussed previously. So our 7th installment is factor that can limit you in raising capital is not establishing a relationship or a relationship early with your lender or banker. So hopefully today you'll get that relationship going, but not establishing a relationship can be a factor that limits the amount of capital you can raise for your small business. And that's a quick Capital Quarter for today. Also, just letting you know, the City of Bakersfield Entrepreneurship Grant Program remains open. You can sign up and meet with an SBDC advisor who can walk you through the process. There are actually 3 parts of this. It's not a quick process. You must complete a business training course. Also, you must actually meet with an advisor for one-on-one consulting and actually produce a business plan. Those are the 3 main requirements for eligible businesses. Has to be in the city of Bakersfield, qualified census tract, or certain other income qualifiers. So contact the SBDC. You can either go to our website here in Bakersfield or call us at 654-2856. So this can only mean one thing for those who've been watching. It's my favorite disaster picture. Yes, it's not one that shows a lot of muddy waters and floods and winds and slides and only probably the people in Mammoth Lake would really resent this after having to deal with snow amounts like this at the White Wolf Ranger Station in Yosemite National Park. But that's a perfect segue into our first guest today, and it's our favorite SBA official. And it's Mary Anne Bradfield, who is a public information officer with the U.S. Small Business Administration. She's with their Office of Disaster and Recovery and Resiliency, who I just call an official. She has been assigned and has been away from home a long time, working with us for several months out here. Mary Anne has decades of experience in working with disasters and public affairs, state and federal governments. Mary Anne, welcome back. It's great to have you here and looking forward to the updates that we have on our disaster. So take it away, please.
Thank you so much for having me, Kelly. We have a lot of changes and a lot of updates from the SBA's Office of Disaster Recovery and Resilience. So I'm going to try to get through this pretty quickly. It can be a bit confusing, so do not hesitate to ask questions. I just want to remind everybody that the Office of Disaster Recovery and Resilience, and from now on through this presentation for brevity, I'll just call it disaster recovery. We help homeowners, renters, businesses, private nonprofits or most private nonprofits, and small agricultural co-ops with low interest loans to help rebuild from physical damage, and small businesses, private nonprofits, and small ag cooperatives with economic injury disaster loans for lost revenues. You don't have to have a physical damage, just lost revenues. Now, we have a new program, and some of you may have heard about it, and some of you may be affected by it. It's called the Rural Disaster Program. And California has received 2 of the first ever rural disaster declarations. And we call those, just as a reference in case you need to apply, California 18049. And Inyo County is the only county, I believe, Kelly, that was affected in your area by that one. And then California 18051, which includes Kings County, Fresno County, and Inyo County. Now, Inyo County is in both of these declarations, and we'll get to an explanation of how to differentiate as we go along. Basically, what a rural disaster declaration is if FEMA declared, or the president declared, a public assistance declaration presidentially, but not individual assistance, and Inyo, Fresno, and Kings County were in that group. Now SBA can go in and do an agency declaration for rural counties if there is at least one business or home that received 40% or more uninsured physical damage loss. And in this case, we've been able to do that. And it has to be in a rural area. Okay. And we've also got regulations that have changed. And you'll note from the presidential declaration, which is under the old rules, to the rural declarations, which are under the new rules, and we'll get to that again. I've got some slides that will go into more of that. But the home loan maximum went from $200,000 to $500,000, and personal property loan maximums went from $40,000 to $100,000. Now that's just to keep up with the inflationary indexes. Business loan limits remain at $2 million, and that's a combination of the physical damage and economic injury. And now the 12 months with 0% interest, that where the payments are deferred, is now permanent. We are also in the new declarations, anything after July 31st, allowing mitigation loans, which is that 20% of verified physical damage that can be added to an approved disaster loan. They can be used for all types of disaster mitigation, not just light disasters. So in the rural declarations, even though you may have received flooding, you can potentially do something like earthquake mitigation at the same time. There are other regulatory changes, such as reductions in paperwork and allowing for co-ops. Things like grocery stores sometimes are are employee owned, things like that that can now qualify for our lending programs. There are other things, but we don't have time to go through all the nuances today, but we're happy to answer questions later. Okay, now this is the presidential, oops, sorry guys, the presidential disaster declaration. So Kern and Mono counties, this is where it gets a little tricky for you. 17757 was the early disaster declaration, which both applies to you. The deadline for physical damages has already passed, but you have until January 31st, and that should be 2024, I believe, to oh, I'm sorry, I apologize, that's the declaration period. You have until January to get your EIDL application in, and it also applies 17842. So if the damage was February 21st, and this says continuing, but I will tell you they cut it off at July 10th. Any damage between February 21st and July 10th falls under 17842 for SBA's disaster declarations. And as you can see, that the interest rates vary a bit, and there's no longer business loans, home loans available for 17757, just for 17842 for physical damage. That deadline is September 1st for physical damage. So be sure and get your application in if you experience physical damage. That's businesses, homeowners, renters for property, personal property loss, and non-for-profit small ag co-ops. You have until January 3rd to get your economic injury disaster loans in, and those are favorable terms. Remember, our job is to help you keep going, help the communities become resilient communities and thriving communities. So we're going to do everything we can to help make those affordable for you. We can go up to 30 years, and the vast majority of our loans are made at the lowest interest rates. Okay. Now for the rural declarations, you have, as I mentioned, we have 18049 and 18501. Inyo County residents and businesses, remember you're in both. So you're going to want to look at those incident periods and make the application based on when your damages were done, whether they were physical damages or economic damages. So that's very important. And Kings County and Fresno County and the others listed there on the slide, you're in 18501. And here is a comparison of the two rural disaster declarations. The interest rates are very similar, but slightly different, and otherwise the terms are the same. And I'm not going to walk through those too much, but as you can see, for nonprofits, you're still as low as 2.375, and for businesses, 3.305 or 4%, and 2.313 to 2.375, generally for home renters and for mitigation. Now, how to apply? You can always apply online at https://disasterloan.sba.gov.ela. And I suspect Kelly is putting that into the chat as we speak. Now, we also have, you can contact SBA or go to our website, sba.gov/disaster. Call customer service at 1-800-659-2955 or email disastercustomerservice@sba.gov. And in the case right now, especially for the rural disaster declarations. We have a virtual disaster loan center available. And just this week, and only this week, we have a location with customer service representatives who can help one-on-one in Corcoran. And actually, anybody that was affected by the disaster can visit that location at City Hall in the conference room. And that was placed into the chat. Kelly's is still showing because I can't see it on my view.
Yes.
Okay, thank you. Now I'm going to show you what I consider maybe the most important slide, and that is our resource partners. As Kelly mentioned, SBA is a big part of the SBDC program, Women's Business Centers, SCORE, and Veterans Business Outreach Centers. And I'm pretty sure Kelly will tell you that they work very closely with their other partners and work together. There's a lot that the SBDCs can do, both to help you with any of the paperwork that may be required for your business application or small business application. And Kelly, do you want to jump in here and tell them a little bit about what you might be able to do?
Well, I think where we could assist at the SBDC is if there's any, basically developing any financial information that you might need. That has really been kind of the sweet spot where we can jump in. Oftentimes with disaster loans, particularly the economic injury disaster loan or EIDL. So if your business has been injured because of the disaster, you need to provide information about that loss, and coming up with that in an organized fashion can be a little bit difficult at times. And that is really one of our strengths.
I will tell you, if I still owned a small business, which technically I guess I still do, it's just not operating, I would be have Kelly and his team on speed dial. Okay, and next, I wanted to give you some examples of mitigation loans, because in addition to recovery, SBA does something called resilience. And we want to encourage you to think about ways that you can mitigate your losses in the future, both physically and economically, by preparing. And how can SBA help you? And I mentioned that the rules after July 31st mean that you can potentially use a mitigation portion of your loan to help become more resilient against any disaster type. And here's some examples. Flood mitigation, it could be something as simple as adding a sump pump, changing your landscaping, or you might have to jack up your foundation. A lot of things. Wildfires, this is something else. And Kelly, you can attest to this. Up in the mountains, I think Inyo and Mono in particular have other declarations relative to fires. And so you can look at that. Wind, it can be high straight line winds or tornadoes. You don't get a lot of those, but we're hearing talks that Southern California could get some. So you might want to think about that. And earthquakes, of course. Those are just examples, but you want to make your case manager or your loan officer and the loss verifier your new best friend, because they can guide you through all of this. They know far more about the details and nuances of every one of these types than I will ever know. Okay, and here's another disaster preparedness resources. There are two, ready.gov. It will talk to you about how to prepare both your home, your family, your community, and your business, including things like, how do I think about a COOP plan, a continuity of operations plans with my employees? How do I get back to operation as soon as possible? And Kelly's team may be able to help you with those kinds of things too. I'll let him speak to that. But it goes into all kinds of different types of readiness programs. And then an organization we do a lot with is flash.org. and they have some brand new modules, excuse me, to help identify free and low cost preparations. So I encourage you to think ahead, because we've seen all kinds of studies that $1 spent on mitigation saves you $6 in the end, and not every disaster is going to trigger federal assistance. So it's going to be you and your insurance, and SBA and FEMA, if it's presidential disaster declaration. We only deal with things that are not compensated by insurance and other sources. So please protect yourself in all cases. It's just, you're going to save yourself a lot of money in the end. And I'm ready for questions. And Kelly, you jump in and feel free to cover anything you think I missed.
Well, the one thing, Mary Anne, is that you have just so much more information, and this has evolved so much. So what I want to do is invite you, when you are in the Bakersfield area, which I know you are quite a bit, is to come into and cut a video in our studio where it can be much more comprehensive that we can put on our YouTube channel. Are you willing? Does that sound like an idea?
Always happy to do that, Kelly. And these came about pretty quickly, and I appreciate your working me in today to at least hit on the basics. But you're right, this is a lot to comprehend and a lot of working parts.
Really is. So let's plan on doing that, and we will keep everybody out there informed once we get that done in the next few weeks.
Thank you so much.
Well, thank you, Mary Anne. I'm going to just give you one question. Obviously, we had some almost disaster-like events occur last weekend with hurricane or tropical storm Hillary or whatever it was. And it did hit, there's some areas, the Ridgecrest area got nearly 4 inches of rain, and there's a lot of places in the desert in Southern California. Is a disaster declaration possible from that storm?
It's too early, to probably talk about that, and we would not be able to speak to it at this point. The governor would request a declaration after an assessment. The state can request an assessment. And just to give you an idea of what that process is, individuals will report their damage to their counties. Generally, the counties will report to Cal OES, and then Cal OES will work with the governor to request an assessment, whether it's with FEMA or SBA individually, to determine if it meets those qualifications. But I think we're just too early in to know exactly what that is. But just to remember that SBA sometimes does its own declarations if it does not rise to the level of a presidential, but the process is the same. So I would encourage anybody who did receive damage to report that damage as directed by the county.
Well, if it's too early to talk about anything, that's what we like to talk about on Webinar Wednesday. So stay tuned, I guess. Well, thank you, Mary Anne. See you soon.
Thank you so much, sir.
Our economic corner that we talk about oftentimes will actually come back again next week. Mentioned the HR hotline. Here are some additional phone numbers for those throughout the San Joaquin Valley, the Central Coast, and even our friends in the Eastern Sierra. So any of those that work for you, if you have any questions, there are free human resources available. You can call with any type of question, as we've learned in the past. Our community calendar, we do have events coming up, a lot of them. The Kern County Hispanic Chamber of Commerce will have their 27th annual conference and business expo next Wednesday. Also next Wednesday is the Central Valley Native Summit, Native Economic Summit, to be held in Porterville. Great events coming up. The Bakersfield Food Management Program, which is an outstanding food service restaurant type for managers, for management that really want to do topics such as learn a lot about your cost and marketing and things like that, is actually being presented early next month by the Extended Education at CSUD. Also coming up is the second annual Youth Entrepreneurship Education Summit that will be hosted in mid-September. Some entrepreneur instructors from USC will be there talking about a book, The Unsold Mindset. Well, sell that mindset, for crying out loud. That is coming up. You can get more information right there on your screen. The City of Bakersfield's Business Security Program has grants available. If you want to enhance the security of your business location, we'd love to hear your feedback from today's webinar, as always. So there's a lot of ways that you can do that. You can complete our survey at the end, or you can go to our Google page and put in a review, or other ways in order to assist us in getting more information to you. And that brings us to today's special guest. And today's special guest is Raquel Jimenez. She's the Business Development and Area Manager for Access Plus Capital. She is experienced working with small business owners and providing them capital to be successful in their business. I did Raquel's deal-making experience, and I don't throw deal-making around in introductions lightly. I think that is one of the greatest skills that lenders and bankers can have, the ability to take a deal and get it done. That deal-making experience to support many entrepreneurs grow and expand their businesses. And with Access Plus Capital, as you know, I provided them some great advice today on trademarks. They continue to thrive in the San Joaquin Valley. They are really working in underinvested communities throughout the valley, continues to be very active in outreach and volunteer work. Raquel, it's great to have you on Webinar Wednesday. Welcome and take it away.
Yeah, well, thank you, Kelly. I just want to talk to you guys a little bit about, what a CDFI is. So Access Plus Capital, we are a non-profit institution. We are a CDFI. CDFI basically is a certified development financial institution that really focuses in small businesses and increase economic independence in the underinvested communities. Not to say that we serve other business owners around the communities. On my spot here, I can show you what the areas that we support in the Central Valley. So we go all the way to San Joaquin, to Kern County. Inyo, I'm happy to say that we have closed an acquisition loan out there recently. A referral that came out from Kelly Bearden, a great partner with SBDC. But really, our focus here, our mission is to support our small business in that Central Valley. Some of the characters, and maybe some of you guys are familiar with this, with what lenders really look for. Still as a nonprofit financial institution, we still want to look into our clients where we want to see their character. If they're credit, the credit score is typically what lenders look for. The cash flow of the business is typically what lenders look for. The collateral. So if we're going to talk about, if commercial real estate, equipment, right? Trucks, what collateral you're pledging into when you're coming in and requesting for a loan. The conditions, which is the state of the business, the trends, what condition is the business in, and capital. So owner's investment into the business is huge, right? Like, how much do you as an owner believe in your business? How much capital have you injected into the business? Or, something that lenders look for to see if, you yourself believe in the business and the injection that you already done. Lending hierarchy. So as we know, we have the traditional banks, guarantee loans, CDFI such as us, community-based loans funds. There's grant funding as well that potentially, if your community, city, or state may have one, a grant for the small business owners, you can seek for that type of funding as well. Crowdfunding Kiva, which is just like a Kickstarter. Very easy funding out there for business owners. Angel investors or family members and bootstrapping is the type of lending that you're going to potentially see out there. So a lot of people, when they think of lending, they automatically they think of traditional banks, right? As we know, with the SBA, there is such loans right now with disaster loans, right? So definitely don't forget about, these other type of lenders that we have. Traditional lenders basically look for the 2 years of business in business, well-qualified borrowers, positive personal net worth, the industry that you're in. They definitely want to see that you have industry experience. How long have you been doing that? Example, you want to open up a restaurant, maybe you're a chef for 10 years and now you want to open your first restaurant. The cash flow, when you are a business owner, is your business going to be able to sustain this business loan that you're asking for? There is unsecured loans and secure loans, lines of credit. So something that you want revolving, maybe like payroll, maybe a line of credit would be good for that on a monthly basis. Commercial real estate. If you now have your beauty salon or your restaurant that you've been leasing, and now you have an opportunity to purchase that building. And the rates may also vary depending on, on the risk and also the credit history. Here are some of our guaranteed programs, which is like the SBA 504 commercial real estate. 7A supports like the short and long-term working capital that you would need, such as like refinancing and existing debt, furniture, fixtures, and supplies. We do the SBA microloan, which is less than $50,000. That would be like working capital, fixtures, equipment, machinery, and inventory. So this is a quick overview of Access Plus Capital. We are a nonprofit 501. We established in 2009 with about 19 bankers and loan committee, serving 14 counties, as I mentioned earlier. The range, loan amount range is about $500,000 to $500,000. We do startup financing, so I want to touch a little bit basis on that. The startup loans. I know we come across a lot of startup partnerships. It's SBA, SBDC, CDFI funds, USDA, banks, Google, and other mission-driven organizations and foundations. Some of these can be also funders of ours. So we cover in the areas of Fresno, Bakersfield. I am in the Bakersfield location office and Modesto office. And here I just want to touch a little bit on the loans that we offer. So I may want to start, on the right with our nano loans. Nano loans are very dear to me. They're between $5,000 to $20,000 with a credit score of 550 to 680 about. And these are for clients that have been in business for a year, and that we see that, hey, you have injected into the business, you started your business, you put in all your savings account into your business, and you just need that working capital, right, to take the business to the next level. You do just need to be in an existing business for 1 year, and I-10 borrowers are accepted. I-10 is what when clients don't have a Social Security, we do accept I-10 borrowers. Some traditional banks may not take the I-10 to do lending, but we do. Then we move into our micro loan. Those go a little higher. They go up to $50,000 with a 600 credit score. Terms between 3 to 6 years. And these are existing. Since the loan is a little higher, we definitely look a little bit more of that cash flow. We want to see about maybe 2 years of tax returns. And we want to be able to say, hey, this $50,000 loan, definitely the business can take on that kind of loan. It does have enough cash flow, and we would like to see a little bit more of the financials. Now that your business has grown, we do go up to $500,000 with a 620 credit score between 5 to 25 years. Existing business, and this is, now you're really buying that equipment. You're buying those trucks. You have a restaurant, and you may want to upgrade your furniture in that restaurant, or you need a new equipment in the kitchen, building. Now you have the opportunity, like I mentioned earlier, you may have the opportunity now to buy that building. So that will put you in an enterprise loan. And yes, again, we look for that cash flow, right? We want to make sure that we're not hurting you, that we do, the business does have the cash flow to take on such a loan. And how we're competitive with the traditional banks is if you notice, I want to highlight our credit score, right? Is, between that 550 to 620 to be able to have lending with us. And really, it's just primarily is we want to make sure that your business cash flows that whenever you're requesting for such a loan. Pledgeable funds, working capital, machinery. I know I mentioned this earlier, acquisition, which is the opportunity of buying another business, somebody else's business who is potentially retiring. Tenant improvements, the inventory you need, food trucks. Food trucks also is another type of loan that we're very, very successful. And we are not just the existing food trucks, but for new startup food trucks. We close many of those startup loans, and we walk the client and guide the client where to get the permits, and we make sure that they are ready when they're ready to purchase that food truck, and that food truck is also compliance. Semi trucks and trailers is one also that I know in traditional banks, either they're staying away from the semi trucks or trailers. So those of you who are looking for that type of equipment, definitely look into a CDFI such as us to be able to support you in that type of funding. So not only the funding that we do, we also have our technical assistance. We have Buffy Norby out here that does our technical support, which is we take on and help you with, any type of business plan and those projections that you need, not only prior, post loan, but also pre-loan. So when we like to still connect with the client, still making sure that you are being successful in your business by following up with you. So some of this stuff is, how we can improve that credit pre-loan, right? If my credit is not there, hey, let's still work with you to get you that loan. And we're going to go through some steps to try to get that credit improved. That business plan that we need for our startups, we do startups. You don't need to, we understand that you don't have any financials to show us. And a business plan and your projections is what we would work on to get to that startup loan. Understanding your financials and cash flow, the marketing strategy. Now that we gave you that loan, right? Now that you're going to take your business to the next level, how is your marketing looking? So definitely, this is also very, very strong for us, the technical assistance that we provide post-loan or pre-loan. If you guys have any questions, here's my information. I am the business development manager here in the Bakersfield location, but not to say, I do serve all 14 counties. If you have any questions, please write down my number. Like Kelly Bearden said, there's a lot more information. I would like to talk about the great success stories that we have from many, many business owners that we have supported to their startups or to their existing business. So I know we have, we're short on time, but definitely feel free to contact me. And if we have any questions, not sure if Kelly, we have time for some questions on these type of loan products or services.
We always have questions. Or we always have time for questions. We don't always have questions. So first of all, outstanding information. let's now at least open it up so you can actually ask a question to Raquel. And Mary is still available also if you have a disaster question. So we have a few minutes left, so jump in there. I do see a question. Let me give that one to you. Troy asked, what is the I-10?
So an I-10 is for non-permanent don't have a residency, they don't have a social security. So non-citizen, non-permanent. Maybe you may only have like a work permit, for example. So I-10 is provided by the IRS. It's a free number that's provided by the IRS, where this number is provided for the intent of doing taxes, filing taxes, if you're a non-resident, non-citizen of the U.S.
Fantastic. Next question was, can we have Raquel's information? And of course, Maureen has already put it in the chat. So it's already in the chat. And while it gives you a few more minutes to ask some questions, let's just review everything, the resources that are in the chat. There's information on the new Kern, or the Kern Assistance Center for Disaster Loans. Hi, Bob is in the chat. So definitely have to repeat that, huh? Also, there's information on the City of Bakersfield Entrepreneurship Program. There's also in the chat where you can apply online for disaster loan assistance for the 2 disasters we discussed. There's the 800 numbers to contact SBA customer service, and that is through, I believe their call center in Texas. I'm not positive, but I will go with that. Also in today's chat, the disaster preparedness resources. And really, that is something that is really good. And also having the funds that Mary Anne spoke about for resilience and for fixing existing problems. You know, I hope those also work for snow. If you have snow removal issues in certain areas where it snowed very heavily, such as my picture. So the disaster prepared resources, and also the resiliency, disaster loan information. Also in the chat is information on some of our community events coming up, such as the Central Valley Native Economic Summit, the Bakersfield Food Management Program. Also in the chat is the security information. If you have Google reviews, go to Google and give us a review. We would appreciate that, or participate in feedback to any way that we can use to make Webinar Wednesday even better. So here's a question for you, Raquel, is that, so glad to meet you. And, or actually it's a, so I think it's more of a comment. She was able to maybe help somebody with a $20,000 loan. Or Raquel, why don't you just go over again if you're looking for a loan in the $20,000 size, because loan size does kind of determine what program you go to. If you're looking for a $20,000 loan, how would you hook up a business with that particular loan size?
Yeah, so we have a nano loan that this product was created a couple of years ago. I want to say like 2 years ago. Very streamlined. The nano loans between 5 to 20,000. We really want to get the funding that the business owners needs right away. Unlike like the traditional loans or the other loans that are more higher on the amount, we request a lot more on financials, right? And we underwrite that a little bit more intense than the nano loan. But all you need is basically 1 year in business, typically show that the business somewhat is already generating income, your business license or your permits that you need. And as long as you can show, we don't look at like the debt service ratios or anything like that. We really just want to see that if the business is generating income already, we can give you that working capital that you need. Very streamlined to where we provide this loan within 10 to 15 days is when we're closing these loans. So.
Great. We have another question. What if your business hasn't reached a profit yet? Can they still apply?
Yes. We base it off projections. So we look at projections and determine the loan that way. So we really here you know, if you go on our website, we really talk about the mission impact. And we take every client's story, business, very unique. So if you don't have that cash flow yet, give us some type of projections that's going to show that the business is going to be able to sustain this loan. So 100%, yes, we can still take on those loans.
And that is something that your local small business development center, your local SBDC can assist you with. Because oftentimes businesses haven't been profitable. They haven't been able to demonstrate that cash flow in the past. But if you do show and you can project, and really with projections, speaking from the SBDC's perspective and having done a lot of these, is that it really is the key is those assumptions that you use in why your business is going to grow to where it is now. So if you haven't been profitable, present the assumptions on why your business is going to be profitable. Take those numbers, forecast them into the future for the next year or two, usually on a month-to-month basis. And oftentimes that can get you a deal from Raquel, our deal maker.
Yeah, most of our, not most, all of our nano loans that we provide in the 50s, 10s, 20s, 50s, 80s, are based on projections and assumptions and a solid business plan. And we believe in that. And we've been very, very successful with that. Unlike traditional banks are very dear to us because we do get a lot of referrals from the traditional banks. They're a lot more conservative and think of risk, right? And we don't. We want to make sure we make the loan happen for you as long as you give us a great understanding what that business plan is and those projections and assumptions that the business will be able to pay down that loan. Thank you.
I agree. Solid, believable assumptions are the basis to all projections. Okay, we do have another question. And the question is, we have started a new business that is owned and operated by the company. So I'm not sure, Raquel, if that is a division of the company or if it's a new entity, separate entity. But it kind of sounds like it's a newer division of what they're already doing. Would financing for the new business be dependent on the projections of the startup or financials of the parent group?
Depending, it really depends if it's going to go under like a DBA from the main company, but yes, we can generally look for the financials from the parent company. If the parent company is also financially, being responsible for this other new company, or we can treat it as brand new. We will treat it if you don't want those to be associated, we can treat it as a brand new entity loan.
Fantastic stuff. And the chimes in my ear are telling me that our time is up. So Raquel, thank you so much for joining us. It was great to get more information. We'll be back next week, next Wednesday. Very special guest, Crystal Quinones of Nurture Childcare, addressing that childcare need. But we will be back next Wednesday for that. So on behalf of Mary Anne Bradfield and also Raquel Jimenez, thank you both so much for joining us. We'll be back next week. So long, everybody.